everyone, welcome back to the channel. Big moves, or should I say non-moves, from the Fed this week. The June 2025 FOMC meeting just wrapped up, and while the Fed held rates steady, the market's reading between the lines. And crypto? It's definitely listening. So here's the headline. The Federal Reserve is keeping the federal funds rate unchanged at 4.25% to 4.5%. That's the fourth meeting in a row without a hike. Not surprising. In fact, 99.9% of the market already priced that in according to the CME's FedWatch tool. But what did surprise some was the updated dot plot. That's the Fed's projection on future rates. And it showed they're now expecting two 0.25% rate cuts before the end of the year. That's a subtle but meaningful pivot toward a more dovish tone. Why the cautious stance? A big piece of it is uncertainty. President Trump's reintroduced tariff policies have everyone guessing. The Fed basically said, we're not making any sudden moves until we know how these policies ripple through the economy. On top of that, there's political tension. Trump's taking direct shots at Jerome Powell, calling him a numbskull and hinting at pressure to force rate cuts. He even claimed the US could save $600 billion a year if the Fed slashed rates by 2 full points. That's bold. But the Fed for now is staying data-driven and independent. Now what's happening under the hood? The labor market remains strong. 139,000 new jobs last month. Unemployment still at 4.2%. That's giving the Fed confidence to wait and watch. Inflation? It's not spiking yet. May's CPI and core CPI both came in better than expected, and the new tariffs haven't hit consumer prices yet. But risks are lurking, especially oil prices and global tensions in the Middle East. So let's talk crypto. A dovish Fed is typically bullish for risk assets, and crypto loves a loosening cycle. The projection of 2 rate cuts this year opens the door for renewed investor appetite. If real rates fall and liquidity expectations improve, you could see upward pressure on BTC, ETH, and even altcoins, especially as TradFi money reconsiders long duration risk. A potential July cut isn't off the table either, but September looks more likely unless economic data turns sharply. Keep an eye on USD weakness. It could fuel another leg up for crypto. And don't forget, regulatory clarity plus Fed easing? That's a recipe for big inflows, especially with spot ETFs now being a reality. So here's the big picture. The Fed's staying on hold, but the wind's starting to shift. Crypto bulls, take note, if rate cuts do start by September, that could be the signal risk-on traders have been waiting for. The next FOMC meeting is in July. If inflation remains soft and job growth slows, that September cut becomes more than just a dot on a chart. It becomes the trigger. Stay tuned. Markets are watching, and so should you. If you found this breakdown helpful, hit that like button, subscribe for more macro plus crypto insights, and drop a comment. Do you think the Fed will actually cut in September, or will inflation bounce back? Until next time, stay informed, stay rational, and stay ahead.